Mining Markets is here at the Toronto Resource Investment Conference, and we're talking to Mickey Fulp, the mercenary geologist. Thanks for joining us, Mickey.
Always a pleasure, Alicia.
We're talking today about uranium, and you're a bit of a contrarian investor. So right now the price is pretty low. It's about 47. It's a two-year low. What's the investment case?
Well, the investment case is as a contrarian, you want to buy things when they're unloved, unknown, unwanted, and undervalued. So with the price of uranium down to $47 the spot price, now long-term price is held in about $60, but the short-term price leads to lower valuations, which I look at as buying opportunities in the uranium exploration and especially the uranium development sector.
So there actually has been a lot of M&A activity in the past year. Are you expecting more to come?
Absolutely, and what I see next, I think the next thing you will see, or maybe not the next thing, but I think coming soon in the uranium business is further consolidation in New Mexico. And we've talked before about how every deposit there, and we have world-class deposits that are unmined, are owned by 2 or 3 separate companies, and those have to be consolidated. So I've been looking for this to happen for quite some time, but with the price low and the need for consolidation, I think maybe we can expect that fairly soon.
So there are some bullish factors for uranium. BHP Billiton announcing that it's going to be delaying its expansion of the Olympic Dam mine would be one of them. How much would that affect the uranium market?
Well, that's a big chunk of change, to use an expression. A lot of uranium was going to be put on the market with that expansion. Now that expansion's off the table, then however many millions of pounds it was going to be, and it was a significant number of millions of pounds, is not going to be coming on the market. The other catalyst we have coming is the end of the Russian-U.S. agreement for high enriched uranium. Now, there's been some indications that U.S. and Russia have reached an agreement to continue to get low enriched uranium for Russia, but that supplies a significant amount of the market, about 24 million pounds a year out of something on the order of maybe 170, 180 million pounds that are used. So that's a significant amount of uranium that its availability to the market is now in doubt. The current agreement between U.S. and Russia expires at the end of 2013. They've reached some sort of agreement for about half that amount, but we're looking at long-term continued demand for uranium. Uranium produces 14% of the world's power. 20% of the power in the U.S. So that uranium has to come from someplace. We have been in deficit for years now, somewhere 20 to 30% every year from mine supplies to the amount used. That, for the most part, was supplied by the Russian-U.S. agreement, and also utility and sovereign stockpiles. We have reason to believe that those utility and sovereign stockpiles are continually being depleted, so less and less. On the other hand, Japan, with shutting down all its nuclear reactors, has removed a significant amount of demand from the market, something on the order of maybe 10 million pounds a year. So we have this supply-demand fundamental situation going on right now, which is not exactly clear. The uranium industry tends to be somewhat opaque, but it is my view that the world's still going to need a lot of uranium in the next 10 to 20 years, and that leads me to be really a permabull in uranium.
So there are a lot of uranium deposits out there. Not all of them are economic at these prices. So what kinds of projects are you looking for?
Well, I'm looking right now for ISR deposits for the most part, or perhaps open pit heap leachable deposits. But as you say, a lot of the current deposits, number one, a lot of the current deposits that are known, especially in venues like Africa, very low grade. Their economics is questionable, to say the least, even in a good uranium market. There's been talk in the industry that $65 to $80 a pound is what's required for a lot of these new producers. You can short circuit that with ISR though. New ISR producer, the newest one in the United States, producing uranium at about $18 a pound. So in situ recovery is the future of uranium industry, in my opinion.
One question just about the markets. We're continuing to see a lot of volatility. Have you adjusted your strategy to deal with that volatility? Because it's not going to be ending anytime soon.
Well, I like volatility because that gives you entry and exit points. So I wrote a piece about 6 months or 8 months ago called "Embrace Volatility." The investors should not fear volatility. You just work within the hand you're dealt. So volatility, the rapid rise and fall of stocks, leads to buying and selling opportunities. So volatility never worries me. I very much like volatility as a contrarian.
Well, thanks for joining us, Mickey.
All right, thanks a lot, Alicia. Always a pleasure.